Pretty sure this is a question bunch of us, if not all of us that were in here or are still in here for the short squeeze to happen had in mind. Well, should I have really sold at 72 or even 77 when AMC hit the highest of all time in the whole history of the company and the stock price in the market? Well, some people would like to think or would like to push us into thinking that that is the right thing to do, all right? But I don't necessarily believe that is the end of everything. It's not because AMC is now on the lowest it has been since this year, since the craziness around payment for order flow, the short squeeze and everything, that it is the end of everything. All right, but let me just share with you an article which I believe will kind of give you that same impression, especially if you are holding MC stock and you're looking to actually see some significant gains in the next coming future based on what happened today and based on this article. So first thing first, if you jump into the price action as we saw it today. So as you can see, man, they suppressed it. They suppressed what should have been a huge I'm sorry, excuse me. What should have been a huge day. Why? Because right off the bat, boom, AMC jumped at some point, 12%? Yeah, 12% on the day. And then it was all across the board. It was GameStop. You can see it here. It was GameStop. It was Ape. They had pretty much the same price action today. Why? Well, because somebody didn't want these stocks to jump to a certain level. All right. Gimme past 30, Ape passed to 2.3, and then AMC passed $7.2 a piece. I mean, these might be levels that are insignificant to you, but these are levels when they touch, the share price touch, you can expect some people that are on the other side of the trade to start getting shaky and to move, which creates even some bigger volume, attracting people gonna day trading it, swing trading it, and also chasing or casting the some shorts away. So clearly we can see from today's action that something is about to happen. These prices are in the brink of going a lot more higher. Now, something that I believe is actually brewing in the back of this is coming from Morgan Stanley. Morgan Stanley chief strategic analyst, but he's one of the big voices in Wall Street and in the big banks, right? So much so that whenever he speaks, you can pretty much expect this to happen and unfold exactly as he said. I don't know why. Maybe it's part of the cabal. I don't know. But the bottom line is he's now calling on to a 6% rally as we get into the Fed shifting its position in terms of interest rate increases. Look, Mike Wilson says the Fed will pivot from interest rate hikes sooner rather than later to help stocks rally by his predicted 6%. So why will he say this? Well, look, the Federal Reserve has been doing this fight. There's been in this path of hiking interest rate, increasing interest rates, jumbo rates after jumbo rates, 75 basis points or 0.75% here, then 0.45% here, and again. It's been 7 times that Federal Reserve have been increasing interest rates. So what does that tell us? Well, it creates an environment where everybody's kind of fearful, right? And when everybody is fearful, the shorts gets in control of the stock market, because when everybody is fearful, they tend to take the money out of the stock market, which kind of creates that avenue for shorts to be in control, because when everybody is selling, it creates a downward pressure, and then it's easy for people to short to push prices down. And stocks prices of companies like AMC, GameStop, the memes are usually the first one targeted. But this whole thing is now kind of showing the end as we get into 2023. Why? Because I'm pretty sure that at this point, when the Fed meets tomorrow and on Wednesday and disclose, the results or the conclusion of their meeting, for the month of November, I'm pretty sure they're going to tell us something like, you know what? I think what we've done so far is now kind of showing signs of effectiveness, all right? We've seen house prices significantly dropping, gas prices are not out of control as they used to be 3 months ago. All right. And then the labor market is also kind of softening. So in other words, what we're trying to accomplish is starting to show signs, which means we don't have to be as aggressive as we used to. And that is precisely what the market is waiting on, for people to start being more comfortable putting money into the stock market. Now, you'll say, well, AC, what does that have to do with AMC? Well, a lot of things. Why? Because AMC, as it dropped based on pretty much nothing, that was just the shorts being in control. And now that people are starting to put money back to work into the stock market, whether they are retail funds, whether they are institutional funds, whether they are the big dogs with the big pockets on the street, well, it means that as we get into this other 6% rally, or maybe higher, to get towards the end of this year, we might see shorts getting burned, even those that we believe couldn't burn. Why? Again, because everybody is kind of expecting the market to, because we are in a bear market, to go down, but we are in this short rally, which I believe is going to continue to happen until we get to maybe January. So that to say that I wouldn't be surprised if we can see these type of actions we saw today with AMC and the other memes to continue to happen as the market continue to gain and gain and gain, especially after the Fed comes out on Wednesday and say, you know what, everybody, time to chill. Time to chill, time to make money. And that's how we can actually get to certain levels where we can see that shorts will definitely get, extremely burned to the core, which will bring back some, positive into the sentiment, especially as we also get into AMC earnings for the last quarter of this year. Let me know your thoughts in the comment section, folks, and we'll get to it.